Hello, and welcome to Virtual Investor Conferences. My name is Anthony Kraus, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from LIFFF Power Limited. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Alex Langer, President and Director of LIFFF Power Limited, which trades on the OTCQX Best Market under the symbol LIFFF, and on the TSXV under the symbol LIFFT. Welcome, Alex.
Thank you so much, and thank you everyone for joining us. Again, my name is Alex Langer, and I'm President and Director of LIFFF Power. LIFFF Power is an exploration development company focused on large-scale hard rock lithium projects in Canada. Currently, we have 3 projects, one in Quebec, where we're the largest landholder within the St. James Bay region, our Kali project, which is located in the eastern part of the Northwest Territories, and our flagship project, which is the Yellowknife Lithium Project, which is located just outside the city of Yellowknife. That project hosts 13 spodumene-bearing lithium pegmatites across over 10 kilometers of surface exposure. We've recently completed over 50,000 meters of diamond drilling within the past 13 months, making it one of the largest exploration projects for lithium in the world. Forward-looking statements, I've already made a few. I'll be making a few more. And again, any questions anyone has, please feel free to use the question and answer component on the left-hand side. So LIFFF, why invest? So obviously a few reasons. One is potential. We do have the potential to be one of the largest hard rock lithium projects within Canada, if not the world. We will be coming out with an NI 43-101 resource report at our Yellowknife Lithium Project towards the end of September. All our projects host excellent infrastructure, specifically Yellowknife, that really does set it apart from other projects within Canada and the world is the infrastructure. We're right on the road network there. We have access to rail and barge, and we're also located on the western side of North America, so easy access to the Asian markets for delivering concentrates of spodumene. We do have an expedited strategy. We've only been public for less than a couple of years, but we have drilled over 50,000 meters, and again, we're targeting an initial mineral resource estimate in towards the end of September, so things have gone quite well there. ESG is also very important when you're dealing within Canada or any type of mining project. You want to have the local community and local groups and stakeholders on side, and we started that process quite a while ago. Even before we did our first drill hole, we did have an agreement in place with the local Indigenous group where they benefit. We have a lot of Indigenous employment. We have a lot of northern workforce as well, and our relationship there could not be better. It's gone really well. When moving forward, we've kind of looked at this project as more of a partnership, kind of taken a little bit of different tact, but it is really important, especially when you want to permit something in the future, to make sure everyone's on board. The team, we do have an excellent team. They have a team of discovery, M&A, as well as mine building. And timing, in terms of just being an investor, lithium has been hit pretty hard here over the last little while. That's going to change. I've been part of lithium kind of last 7 years, and I'll get into that in a little bit. So I've seen these cycles. They go up, they go down. We're definitely at a pretty big down right now. Lithium, carbonate was trading about $80,000 a ton a while ago. It was way too high. That wasn't sustainable. We're currently trading around 10,000 right now. So a huge drop off. So we've seen some amazing companies, some major projects where the investment scenario and case right now is really strong. So we're nearing a bottom. I don't think lithium could really come down much further than this. We're well below a lot of profitable or formerly profitable mines. So when lithium prices or commodity prices drop, you see different projects coming offline. We're seeing that in China right now and throughout the rest of the world. So if you're looking to move into lithium, I personally believe this is incredible timing. As the old adage goes, you want to buy low and sell high. So that's a good opportunity, I think, for lithium right now. So our projects, I kind of briefly touch on them. This kind of gives you a broader scope of where they're located. So our Yellowknife Lithium Project, which is our flagship, is located right outside of Yellowknife. We do have 13 spodumene pegmatites with near 100% exposure at surface, excellent transportation infrastructure, which I'll get into on the next little bit. And of course, we have completed 50,000 meters of drilling. Our Kali project was also located in the Northwest Territories. We have a pegmatite dike swarm there with 1.5 by 1 kilometer surface area, which is quite a large area for these types of projects. Road accessible within 6 kilometers of the pegmatites, and we are permitted to drill there as well. So the plan is to drill up in Cali sometime next summer. And then finally, our Quebec Green Hills project. Again, we are the largest landowner within the St. James Bay region. We have incredible spodumene in till anomalies, which I'll get into at Pontex. We're kind of surrounded by some of the big players over in Quebec, so we do have potential there for a major discovery in the not too distant future. Now, quickly on to people. Francis McDonald, he is our Chief Executive Officer. He's a geologist. He's amazing in terms of his ability to look at geological potential in various projects. He's taken a lot of his work that he did at Newmont. He worked quite a bit in the Canadian Arctic as well as Africa. Previously to LIFFF, he founded another company called Kenorland Minerals. Kenorland Minerals is one of the darlings of the junior market. They have an incredible, exploration budget on an annual basis. They have partnerships with some of the largest mining companies in the world. I think they spent about $30 to $50 million of other people's money on exploration within Canada. So he's done really, really well, and we're quite fortunate to have him as a leader of LIFFF. I myself, I come from a capital markets background. I started my career at Canaccord Genuity. I left there in 2009, and since then I've been kind of founding companies, putting together management teams, raising capital, things like that. On the lithium side, I was part of a company called Millennial Lithium, where I was vice president there from the very beginning. We were able to, start a project, a lithium brine project in Argentina, and we sold that to Lithium Americas just over 2 years ago for just under $500 million. Which was a great exit. So again, saw lithium up and down all the way through and going through the various stages of, resource and then feasibility, then definitive feasibility, and through the pilot plan and all the way through M&A. So really got comfortable with lithium moving forward. And I think, it's just a downturn right now, but things will pick up again. A couple of the people I'll quickly touch on. One is April Hayward. April is our Chief Sustainability Officer. Usually a company of our size or position in terms of a timeline or project wouldn't bring somebody on of April's capabilities so early in the process, but we have, and we were very, very lucky to have done so. April's actually permitted 2 mines in the Northwest Territories, and her relationships, her abilities to communicate with Indigenous groups and local government and help stick handle the whole process has been invaluable. And she's on the ground there and really, really helping within that process. And then finally, Dave Smithson, he's your Senior Vice President of Geology. He held the position of Global Specialist at Newmont, which is pretty amazing. So he's the one really in charge of, operating the drill programs and now moving towards that mineral resource estimate and eventually the PEA, which is also now expected to do sometime next year as well. So he handles the rest of the technical team under his guidance. The board, we've recently, kind of switched out the board from a junior mining company to a more senior mining company over the last number of months here. We brought on a gentleman named Paul Gruner. Paul Gruner is the CEO of the Lecho Investment Corporation, was an Indigenous-run investment group. He's in and around the Northwest Territories quite often. Again, excellent relationships with government and local Indigenous groups, and it gives us a lot of credibility with the work that we're doing up there. Eva Bellissimo, she recently joined as well. She's one of the top M&A lawyers in Canada. Again, we're delighted that she agreed to join the board. And then, of course, Ian Scarr. Ian was our Chief Operating Officer at Millennial. He's actually had, I think, 3 or 4 projects go from initial discovery all the way through definitive feasibility study, including Millennial. So he's well known. He spent about 30 years at Rio. He's done really, really well. And so he's helping us quite a bit on the geological side and guidance and things like that. Now to the Yellowknife project. So infrastructure, as I mentioned, is really important. Our 13 pegmatite outcrops are located anywhere between 20 and 80 kilometers to the town of Yellowknife. They're located within the Ingram Trail. The Ingram Trail is a road. It's an all-weather road. It's fully paved. And that's the road that actually services the diamond mines. So the Acadie mine, the Diavik and Gaucho Quay. So it's a well-maintained road, and we're very lucky to have that infrastructure such close by. There's ample power. There's hydroelectric within Yellowknife. Now the diamond mines at Acadie and Diavik, they're all slated to actually shut down in kind of the next 5 to 7 years. So if our timing works out well, we'll have an ample workforce available to us within that time. Also, what's quite important is resource and mineral exploration and development mining takes up about 30% of the Northwest Territories economy. So with these mines shutting down, there's going to be a huge gap there. And I think, this project could really help fill some of that socioeconomic gap that's going to happen when these mines shut down. Now, outside of just road access that we do have, there's also a railhead at Hay River. So eventually, if this project does move forward, we'll be producing concentrate. And concentrate becomes quite expensive to ship via road. So we have a road, it's about 460 kilometers to Hay River. But once you're on railhead, it's actually very inexpensive to transport quite a bit of material. And also within the summer months, we can actually barge from Yellowknife to Hay River. This is Great Slave Lake. It is one of the largest lakes in North America. I think it's the sixth largest lake. It's actually monitored by the federal government. There's a Coast Guard and everything. So it is a proper shipping lane in the summer months. So infrastructure is extraordinarily important when you're looking at any of these large lithium projects, really because of the cost of transporting the spodumene before it can get processed. Now, moving on to processing. As you can see here, we really are the only major lithium spodumene mine located on the western side of North America. We're located here. We have the railhead within Hay River. And once you're on railhead, again, you can transport it anywhere. Right now, the only processing centers for lithium fully operation are in China, or there's one now in Korea. So if you have a large amount of spodumene, you have a large resource, getting it over there is going to be the tricky part. But for us, we do have excellent infrastructure. Now, moving forward, there are expected to be a number of new processing plants, hydroxide and carbonate plants within North America, probably some on the East Coast, but I do foresee one perhaps opening in Edmonton. We've had a number of groups reach out to us. Edmonton, there's low power. There's a critical workforce there that understands chemical engineering and things like that. So I think moving forward, we could possibly see a lithium processing hub in Edmonton. And of course, the Yellowknife Lithium Project, as well as Cali, could very well feed that in the future. Now, I touched on ESG as well earlier. This is ongoing. We started our ESG work in 2013 as soon as we acquired the Yellowknife Lithium Project. As you can see, Indigenous workforce is about 28% and local Northern workforce about 26%. So a really high number. So again, we're not just providing lift service. We're actually doing really good work and engaging the community on a regular basis. And again, that's led by our Chief Sustainability Officer, April Hayward. So what do they look like? So the Yellowknife Lithium Project, visible from space. It's kind of our tagline, simple tagline, because you can see them from space. So this is just Google Maps on the left. You can see these white little outcrops. That's literally what they are. And this is what they look like up close. So in terms of exploration drilling, in terms of geology, it's super simple. This is a drill rig. We point and shoot, and then you step back, you point and shoot again. And that's giving us the information we need to eventually come up with that mineral resource estimate. What you're looking for is very similar grades at surface, and you want to see a bit of continuality kind of under surface, and that's exactly what we're seeing. So we have completed now 50,000 meters. We've actually only drilled 8 of the 13 different outcroppings that we do have there. So the resource expansion potential is quite large. We've actually only shut off one of the spodumene, the pegmatites as well. So we have 12 of them still open, whether that's at depth or at strike length. So the exploration potential beyond what the original mineral resource estimate will be is quite large. Now, the drilling's gone extraordinarily well. Average widths are between 10 to 30 meters. Strike lengths are an average about 1 kilometer in length. And the grades we're seeing are between 1 and 1.2% lithium. Again, really good grade. So all that information is going to come into this NI 4310 resource report, which is due towards the end of September. These are the block models are starting to come together. And as you can see, we're having this consistency at surface, kind of all the way down. Some of them pinch, some of them swell, some of them are bigger, some of them are smaller at surface, but they're all relatively consistent and exactly what you want. So when you're doing a mineral resource estimate, you have to be able to prove that you can actually kind of remove that material. So you can see some of the pit designs, which have started to form around some of our pegmatites, whether it's Shorty, Big East, or Phi Southwest, and then also Echo. Echo is actually quite interesting because the pegmatites are more flatlining rather than being kind of subvertical. They kind of come across. So if you're looking at a pit design, you can see much less dilution and possible waste if you ever do start mining within these pegmatites. Metallurgical testing is also really important when you're looking at lithium, especially spodumene and pegmatites. Not all projects are created equal. Not all lithium is really that easy to process unless it's spodumene. So spodumene is one of the easiest minerals to process. You get usually around it's much easier to process rather than lepidolite or some of the clays that are out there. So for us, we are quite lucky. About 95% of all our lithium is hosted within spodumene. There was a previous operator of the project, which was Equinox Resource, and they did quite a bit of metallurgical work, and it came out quite positive. They were able to get actually about 80% recovery using traditional methods, and that was just gravity concentration with tabling and floating, and able to get 80% in 1987. So there are now more modern methods for processing, whether using flotation or DMS. So for us, we've now completed 9 tons of rock that we sent for processing. It's really important to understand, whether it's going to be DMS, whether it's going to be gravity, and what our recoveries are going to look like. So having the base case of 80% recovery from historical means, we should be able to improve on that or at least match that. It is quite positive. So again, you want to make sure you have good grade, but you can also recover that grade. And spodumene is the easiest type of mineralization of lithium to recover within these pegmatites. Now those results should be out within the next month or so, just before the mineral resource estimate, which is due again by the end of September. Another little visual we'd like to show is kind of the size potential that we do have. So on the right, you can see Sigma Lithium. That's kind of those green outlines. Now, Sigma Lithium is one of the best lithium companies out there. They're in production. They have a great size resource. Their exposure at surface are these green lines here, and they came out with a mineral resource estimate of 109 million tons, grading at 1.39% Li2. Now, if you look at over here, this is apples to apples comparison. The yellow is us. These are outcropping resources we have. We actually have about 30% more surface exposure than Sigma. So it goes to show some of the lithium potential we do have. If Sigma's 109 million tons, we'll see where we eventually end up. Pure benchmarking. Obviously, everyone's kind of suffered here in the lithium space and in terms of lithium pricing and kind of the investor sentiment moving forward. It's just a phase. It's going to pick up again, but we're actually at our lowest market cap ever since we started this company. We're up to 800 million at one point. Now we're down to 120 million, which is, I think quite low. Having said that, without a drive of lithium price moving forward, we do see a way to get a re-rating quite quickly. And that's really to do with the upcoming MRE report, the mineral resource estimate, which is due in September, also the metallurgical work, and of course the PEA, which is now due in the first half of 2025. So we feel we can get up to kind of, Salinas once they hit the PEA level. So that's, a triple just looking at market cap over the next little while with some of the work that is ongoing and should be completed quite shortly. Quickly on our Cali project. So Cali is also located in the Northwest Territories. Also good infrastructure. We're located about 6 kilometers from road. We've done a bit of work there already. As you can see here, we have this pegmatite dike swarm, which is actually quite similar to Colina, which is Latin Resources. We've done about 163 samples. 124 of them had more than 1% lithium. We are permitted to drill, but at Colina, they have about 70 million tons of 1.27% lithium, and very similar to geology. So that's kind of the size potential we do have there. We're quite excited about this project, and we should be drilling it in the summer of 2025. Finally, our Quebec Greenfield projects. We've kind of broken this down into 3 separate projects, our Rupert, Pontax, and Moyenne. We're in and around some of the biggest projects down there, obviously Rose, Critical Elements, James Bay, and we're literally surrounding Nemaska. So really highly prospective land. A lot of the areas covered by forests and soil. So we have to use different type of geology techniques to figure out, what type of potential we do have here. And we've been doing that over the last 2.5 years. And we come with some really interesting results, which I'll get into here. I'm actually just going to skip ahead to Pontax. So at Pontax, we have a 13 kilometer by 6 kilometer spodumene anomaly. So that's in soil crystals of lithium. So we can actually see what's there just by taking samples of the soil and putting them together and extrapolate that information through the rest of the project. So it is a really big area. Again, 13 by 6 kilometers. So how do we target into specific areas of interest? So we're fortunate enough that we actually do have the reading for Whabouchi. So this is Whabouchi. That's 46 million tons of 1.36% lithium. We control the land kind of around it. And what we saw here is a very large anomaly. Now, this anomaly would have come from Whabouchi. Historically, millions of years ago, there would be glaciers on top, or tens of thousands of years ago on top of these, and they would have slid and brought a lot of the lithium from surface and deposit it into the soil. So we understand what that looks like here. We also understand what it looks like if there's no lithium. So we kind of took that information from this area of the project and went over to Pontax and kind of littered the whole area of the project to understand what is there. Now we've come up with about 8 or 9 very significant anomalies, which are very similar in size to the anomaly of Whabouchi. So we do have the potential to come up with, an incredible deposit here over the next little while. We're very, very encouraged by Quebec, and we'll be continuing the work program. We're actually starting there again in September to gather more data, get ready for a drill program. But as you can see here, 1, 2, 3, 4, 5, 6, 7, 8 potential Whabouchi size deposits, which are in our Pontax claim already. Now, timeline and catalysts, winter drill program that completed April 7th. We've now released all the drill results. We're very, very happy with them. That plus the 35,000 meters we drilled last summer will make up our maiden mineral resource estimate, which is coming out in September. Metallurgical testing, that's been sent in. Those results should be out in the next little while as well. And then Quebec surface exploration program will start again in September. And again, we'd like to do another drill program sometime towards the end of this year. Environmental baseline data, we started collecting that information in 2023 with the hopes of a full environmental assessment starting in 2025 next summer. It's a lot of work, but it is important. So the cutoff we have done for the mineral resource estimate is April 7th. And again, we feel it could be much, much larger in the future. We decided to take kind of a different tack. We could have just kept on drilling and making this bigger and bigger and bigger. But we really thought it's quite important to come out with a benchmark. This is where we're at now. It can obviously get bigger, but start to put economics around that project to build a little bit more interest within the market, as well as get a bit more government support. I think once people realize kind of the size and potential we do have the Yellowknife lithium project, we'll get a bunch more support. Will kind of be, one of the bigger names, hopefully, in the world in terms of lithium spodumene projects, and we'll be able to push that forward a little bit quicker as well. Capital structure, we maintain a really good capital structure from the beginning. We have 43 million shares outstanding, 44 fully diluted. Insiders and management, we currently own about 50% of the total stock. Our largest shareholder is one of our founders, has actually invested about $20 million into the company so far. So we have really good support. We have some great institutions, including Commodity Capital, Extract, and Tribeca, to name a few. We do have analyst coverage all the way from Canaccord, SCP, Beacon, and Cormark. The targets from all those groups are minimum $8 all the way up to $13.50. So, when lithium turns around, we will be one of the first companies to really push forward. And again, we do have a number of catalysts moving forward. We have cash position of $4 million, which gets us through for the next little while. We do expect a re-rating once the mineral resource estimate and metallurgical work comes out towards the end of September. And with that, quick highlights on the last little vid here. Resource estimate, again, really big catalyst that's coming out towards the end of September. Environmental work is advancing all the way through. Really, really important when you're looking at a project of this scale. Drill target definition at Pontax. Those were the 8 anomalies that we do have. Pretty much ready to drill, hopefully for next summer. And then the metallurgical testing, which is coming out in the next number of weeks here. And with that, any questions at all, please feel free to post them in the question and answer. If not, easy to get a hold of us anytime, investors at LIFFF.com. Thank you again for your time. Really appreciate it. And any questions, I'm here to answer them. Thank you very much. Okay, we have some questions here. First one is, how much capital and in which way do you need for development, equity, strategic partner? So we're working on that number right now. We want to, theoretically raise enough that we can get all the way to invest, a production investment decision, which is quite important. Probably looking anywhere between $30 to $35 million, I think would be the total amount. Equity could be a component of that. We've had a lot of strategic interest as well. I think once that resource comes out, we can really benchmark and, figure out exactly where we're at. There'll be a lot more interest there. So those conversations have been ongoing. We do have some very strong shareholders as well. So I'm not too concerned about raising capital. We've shown the ability to do that as we've raised about 70 million over the last couple of years. So capital is available to us, and we'll do obviously what's best for the company in terms of the least dilutive. tax flow benefit. So usually our equity issuances are at a much higher price, which again is lowering dilution. So I answered the following questions. How much capital has been raised since inception? That's $70 million. The last raise was right around $650, $7. We're currently trading around $250, $260. So a really big delta there. And that was only a few months ago. And again, nothing to do with the company. We've done really, really well, especially exploration wise. So it's just a matter of the fundamentals of the market and the lithium pricing dynamic right now. So we have another question. When do you plan to start production at Yellowknife, and will there be one or more increase of capital stock necessary? Thank you. Production is still a ways away. Realistically, we still have to complete our environmental baseline, and that's a 2-year process. You also have to complete your mineral resource estimate, your feasibility, and probably a definitive feasibility. Having said that, we are a critical mineral in terms of lithium, so we are seeing a lot more government support, and the federal government has discussed, increasing those timelines to help with that process. Because currently, just for example, right now, you can't actually apply for a mining permit until you've completed your your environmental assessment. So perhaps those two could be combined, what could save you a whole year. So kind of best case, we could see construction in 2029, 2030 if everything went well, kind of within that time frame. And again, that's really around the same time as those diamond mines would be coming offline in the Northwest Territories. So really huge economic benefit to the region as well. So what is our drilling cost per meter per asset? That's a good question. It's been pretty expensive, to be honest. I think with assays, we're running around $550 to $600 per meter. Last program was a little bit more expensive because there was actually a lack of snow in the Northwest Territories. It was unseasonably warm. So in terms of, it's actually usually cheaper for us to drill in the winter because we can sled, the drills in and out rather than using helicopters. So it's been more expensive than we had hoped, but we do feel there's value in being as quickly moving this project as quickly as possible. So we're really focused on delivering results as opposed to saving $50 to $100 a meter here or there. So it's been quite expensive. Close to, I would say, around $600 per meter has been the cost of exploration. And I think that's it for the questions. Let me just double check, make sure I haven't missed any. That one. And how support from local communities. It's been great. Again, we engaged them at a very, very early stage. We kind of took a tack that this is going to be a partnership. So whether it's permitting, whether we're working, closely with Indigenous groups, local, hires and things like that, we've kind of done almost like a nets benefit agreement for them at a really early stage, which has been great. So we've seen employment and things like that start much earlier than you normally would for a project. We feel this is going to be a mine one day just because of the sheer size and scope of the project. And by having the communities and support is really, really important. So, moving forward, I see for scenario where, we're doing the environmental assessment in conjunction with the local groups so that everyone's always communicating, they're always on side in what we're doing and wanting to see these things move forward because it could be a huge socioeconomic benefit, not just for LIFFF, but for the local Indigenous communities and the local communities as well. So we're there for every day we can be, and we have a big presence within Yellowknife as well. We've got about a minute left, but I think we've kind of touched on all of the questions. And with that, I'll thank everyone again. Again, any questions at all, always happy to chat. Please reach out to myself or Francis or Daniel at any time. And thank you again for your interest in LIFFF, and